The first week of March 2025 will be seared into the memories of millions of Americans. The stock market, that barometer of our collective economic health, went into freefall. The Dow Jones, the Nasdaq, the S&P 500, all major indices plunged. This wasn't just a blip, a temporary dip. This was a crash, a stark and brutal reminder that the rosy economic picture painted by some was a mirage. For many, the crash brought back chilling echoes of 2008, a time of widespread economic pain. But this time, the causes were different, and the architect of this downturn was none other than former President Donald J. Trump. The impact was immediate and widespread. Retirement accounts, painstakingly built over decades, saw their value shrink dramatically. The dream of a comfortable retirement, already fading for many, seemed even more distant. Fear gripped the markets, and uncertainty clouded the future. The question on everyone's mind was, how did this happen, and what comes next? The answers, as they often do, lay in a complex web of policy decisions, global events, and perhaps a dose of hubris. The seeds of this economic crisis, however, were sown long before March 2025. They were sown during the Trump presidency in a series of economic policies that prioritized short-term gains over long-term stability. Donald Trump's economic policies were always a gamble, a high-stakes game of chance that promised to make America great again. His signature move, the imposition of sweeping tariffs on goods from China and other countries, was touted as a way to protect American jobs and industries. The reality, however, proved far more complicated. While some industries did see a short-lived boost, the tariffs ultimately led to higher prices for consumers and businesses alike. The trade war with China, far from bringing them to their knees, only served to escalate tensions and disrupt global supply chains. American businesses, large and small, found themselves caught in the crossfire, facing higher costs and dwindling profits. But the tariffs were only part of the problem. Trump's other major economic initiative, a series of massive tax cuts, primarily benefited the wealthy and corporations, while doing little to address income inequality or stimulate real economic growth. These cuts, coupled with increased spending on defense and other areas, ballooned the federal deficit to unprecedented levels. The combination of these policies, the tariffs, the tax cuts, the deficit spending, created a perfect storm that left the American economy vulnerable and exposed. The stock market, buoyed by short-term gains and fueled by cheap credit, continued its upward climb, masking the underlying weakness of the economy. But the cracks were beginning to show. By early 2025, the chickens were coming home to roost. The Federal Reserve, tasked with keeping inflation in check, had been raising interest rates to cool down the overheated economy. But it was too little, too late. Inflation, long dormant, reared its ugly head. The Consumer Price Index, a key measure of inflation, jumped by 4%, the highest level in over a decade. For ordinary Americans already struggling with stagnant wages and rising costs for healthcare and education, the 4% inflation rate was a hammer blow. It meant that the cost of everything from groceries to gasoline to rent was going up, eating away at their already stretched budgets. The average household, according to some estimates, saw their monthly expenses increase by $475, a significant burden for families living paycheck to paycheck. The economic pain was particularly acute for those living on fixed incomes like retirees and those receiving disability benefits. Their purchasing power eroded with each passing day, forcing them to make difficult choices between putting food on the table and paying for essential medications. The American dream for many was turning into an American nightmare. Section 4. Weathering the Storm, Practical Tips for Tight Times.